What is going on, everybody? Q here from Hyperstocks. Thank you so much for coming on board. In this video, we're going to give you a market update, more specifically on SPY or the S&P 500, and we're going to go over some of the trades that we made today. We hit 3 of 3 trades, which were day trades, all of them in and out within about 20 minutes, and we're going to walk you through the strategies that we used and the option contracts that we took on them. So first, let's talk about SPY, and let's give you a daily update of the market. By the way, we are going to be doing this on a daily basis through market days, so Monday through Friday, and we're going to give you a SPY update and a full recap of what we did that day. So if you want to subscribe to see more videos like this, please do so now and make sure you like this video. So let's go ahead and start with SPY, and we're going to start with the weekly candles. So we like to look from the outside in, from the macro picture into the micro picture, and the most macro you can get is pretty much the weekly, unless you look at the monthly as well. For our purposes, we're going to stick to the weekly. Let's talk about the weekly candles. So obviously, SPY came from a very high in November of about 480 before we started crashing down to around 360 just recently. So just last week, we hit the lowest point of the correction right around 362, and this week it looks like we're bouncing back just a little bit. We're not holding this bounce just yet. Overall, you got to remember that the smaller or the shorter term trend is likely going to fool you. So you want to understand where the overall picture is. That way you can project properly. So first of all, the longer term trend is obviously bearish. We've come down from this bearish head and shoulders, and we're at the lowest point, potentially may come down further to 350. Now that we know that the weekly candle is below almost all important moving averages except the 200-day moving average, this is a point which we haven't broken since the COVID-19 pandemic crash. We're going to look at the daily candles. So the daily candle did something that we haven't seen done since the last mini market rally, which was back in May. We opened above the 10-day moving average. So the last time we opened above the 10-day moving average, we actually ended up rallying for 3 more days, consolidating and selling back off. This case, we may see the same thing, or we may see something that looks like this, where we move above the 10-day moving average and end up selling off because it was a fake bull rally. So I always like to give markets a couple days of confirmation before saying that yes, we're back in a potential small bullish rally. But going into tomorrow, we're also seeing that SPY on the hourly candles is also back above its 100-day moving average. So it's back above all the important moving averages that we study. Now this gives it room to the upside to move to potentially fill the gap to 390. So there is a gap to 390 to be filled. So the S&P 500 may be able to do that. In order to do that, it will need to break above 378. 378.70, which was yesterday's highs, and it also needs to break above 383.75, which were the highs from the 15th of June. So we need to break above those two highs in order for us to rally further. So given that information, if we break above 378.70 tomorrow, our first price target is going to be 383 to 384. Above that, we can see a move to 390 to fill the gap from June 10th. Now, let's talk about the trades that we took today. First, we took a trade in Meta. So you can see at 6:47 in the morning, this is East Coast timing. We took a trade, which was a call on Meta. This was sent as a day trade, a high risk, high reward day trade, and we entered at 171. This call was entered right at the lowest point that Meta formed this morning. So after Meta came down, we did notice that yesterday Meta rallied, and then it sold off at the end of the day. When it sold off again this morning, we did notice that volume was a little weak. It tried to hang out here just for a little bit. We noticed a little bit of a double bottom, and so we decided to enter. And our entry called for a price target of 157 and 158 and a stop loss of 154. Our stop loss was 154 because it was just below the lowest point of day in that morning. So when the stock comes in the morning time especially, there is a lot of movement. So the direction is not yet set. So if you feel like the downside move is a little weak, that means that there could be a chance that we could reverse back up. Knowing what we know about that, we decided to enter at the lowest point that we saw in the morning, and we placed our stop loss just below that point in case we broke below. We did. We actually broke below the lowest point of day. Our setup was sent right here. We actually ended up breaking below here on this third leg down, but we never hit 154. You can see that we came as low as 154.25 and it held, and then the stock skyrocketed back right to our price target, which was right here, 157 and 158. which we derived from the high of day. So anytime that we are scalping very early in the morning, we usually use low of day and high of day as our price targets, because high of day was formed in pre-market. Pre-market, you can see that high of day was 158 and then another resistance at 157. Because of that reason, our price target was 157 and 158, which you can see that it worked out perfectly. We took 4 calls on Meta for a total of 684, and we exited half at 182 and we exited half at 185, which was a total of a $50 gain. So not much, but still a pretty solid return for the first hour of the day. Within this was about a 12-minute play, so not too bad, huh? Next play we did was BABA, so we entered BABA calls. Let's pull up the BABA chart and let's talk about the strategy that we used. So right off the bat, we know that BABA's daily candle is one of the most attractive daily candles chart right now on the market. In fact, almost all Chinese names have this attractive daily chart right now. The reason why we're saying this is because it's trading above its 10, 20, 50, 100-day moving averages. The only strong moving average they're not trading above is the 200-day moving average. So many charts right now, I'm going to give you an example, like AMD is trading below the 10, 20, 50, 100, and 200. So it's trading below all those moving averages. Apple just made it back above the 10, but BABA and other Chinese stocks are trading above a lot of important moving averages, making them more on the bullish side. With that being said, when we saw their gap up this morning, we naturally just gravitated towards the stock, because a gap up could mean pullback and then rip. And so exactly that happened this morning, but we didn't play the full pullback. We actually ended up playing the morning pullback. So we focused on this. When we saw BABA come down here, we entered the stock right at 7:31 in the morning. So we entered the stock on the double bottom. So we saw it come down to the 100-day moving average. You can see that it bounced, came down, and it bounced once again. So the moment it bounced again, we assumed that there was a double bottom at the 100-day moving average. Our stop loss was just below the low of day, which was right here at 108.50. So our stop loss was 108, and our price target was 112 to 113, which was the high of day. So we wanted to enter this range, but you can see that we actually ended up closing BABA a little bit early. We closed half right at this rejection, right at 112, and that's because we needed that break above 112 in order for us to trust it. Why is that? That's because in the morning time, when BABA pulled back, you can see that this bounce happened at 112. So BABA formed that support. When we break below a support, which happened 1 minute later, that support now automatically turns into a resistance. So when we did take profits at 112 again, it was right at that rejection. We ended up closing half, and then the rejection worsened and we closed the other half at 178. We took 6 contracts on BABA at 163 for a total of $978, and we sold for a total of $1,100, and that's a $132 gain. The last but not least trade that we took was SPY. SPY calls were entered at 8:06 a.m. This was again West Coast timing, 8:06 a.m. We took on SPY calls right on this pullback right here. So the reason we took this is because SPY had maintained the VWAP for the better half of the day that we were watching it. With that being said, when we came down to VWAP, we thought that was a perfect opportunity to get in for a reversal. So all day we've been watching SPY, and we noticed that every time it moves up, it comes back down, it retests the breakout support, moves up again, forces its way back down, and quickly bounces up. So here it was replicating the same exact move. It comes down, and we took advantage of the pullback, and we placed a low risk stop loss just below the VWAP, which was 376. So our stop loss was just below with this point. So knowing that we entered at a support, it's always nice to enter at a support because your stop loss is so low risk just below the support. So SPY reversed, and you can see that it didn't come down to that 376 mark. It reversed, and again we used high of day as our price target. So our price target was 378 to 379. You can see that the market moved to 378, got rejected, and moved back down. So high of day and low of day are typical resistance and support points. So they're always good to anticipate as price targets and stop loss points. One other thing that we have to mention is there could have been a chance to hold these setups longer if we wanted to hold them longer, but the reason why we didn't is because SPY never broke out. So in order for us to say that there's going to be a stock rally or a market rally, we need momentum. And in order to have momentum, we need a full-on breakout. Knowing that the market is maybe on the verge of a potential upside reversal right now, or perhaps it's just range trading, knowing that it never broke the previous day's highs and it got rejected, that means we could range trade all day, just like we did here. You can see that we tried to break above, we failed, we tried, we failed. Once again this morning we saw the same thing. What this does to the stocks in general, is it just moves them up and down in a very choppy way all day. It's perfect for scalping and day trading, but if you're the type to buy and hold, if you bought that call that we did this morning and held, you would have gone through one hell of a ride before you made it back up, if you ever did. So, on these days when we don't break out of a resistance in order to rally up, or we don't break below a support in order to sell off, you don't want to be in short-term position like day trades for too long, because then you end up kind of getting thrown around with the choppiness of the market all day. So it's always good to kind of have the strategy or the game plan, or knowing the breakout points of the day. So for example, when we came into today, we knew that SPY needed to break above 378.70 in order for it to rally. And you can see that the market is about to close and we still haven't successfully broken that point. We rallied all the way to it right now and we still got rejected at that point and moved back down. So that makes day trades, in order for them to rally, that makes it almost impossible. The reason why we watch SPY so much is because it gauges the overall market. Very rarely are you going to see a stock rallying, or a few stocks rallying on their own, especially if they're included in the S&P 500, without having SPY rallying with them. They're often going to be following one another. So that's something to keep in mind. You always want to keep watch on SPY, because SPY is going to give you where the overall momentum in the market is, in order for you to execute more properly. But anyways, you guys, thank you so much for checking in. I hope you guys enjoyed this video. If you did want to see more videos, please make sure to subscribe and make sure you give us a thumbs up. Thank you so much.